Hey guys, welcome back to today's substitutor. Guys, can you hear me? If you can hear me, just let me know. I'm not going to take time. Just little brief. And in the meantime, make sure that you have your pen and paper with you, because whatever I'm going to say, if you don't write it down, you'll forget that, and later you will blame me that brother, you didn't never talk about this. Just let me know if you can hear me. If the sound is okay, clear. It should be clear, by the way. But still, if you can't hear me, then let me know. Can you hear me? Hello, hello, hello. Okay, you can hear me. Thank you, brother. I'm not able to log in to the Tradovate account here because I already blew it. So I am not able to show you the execution, but I can talk about the execution if you like. Around the London session. So what is the London here? That is the London session. Around the London session, I saw this sell. I was afraid to take that sell. I didn't take that sell. Then I took this buy. I took the buy from this fair value cap, got stopped out here, then took rebuy here, just got break even here. So my loss was around 164. I'm just not able to show you the execution, so you have to believe me, whatever I'm saying. First, I saw this relatively equal highs from 15 minutes chart, so I just didn't believe this sell because it was just before 3. So I thought that around 3 it will tap to this new day opening gap. That is the new day opening gap from today. Okay, this is the closing, this is the open, this is the new day opening gap. As market didn't tap to this new week opening gap around the London session, let me make it a little bigger. I'll just show you where I did what I did, and then I will talk about the price action. It didn't tap to this new day opening gap, so I wasn't confirmed here to take that sell from this gap. But it was very nice. I was feeling like I should go for that sell. I didn't go for that sell. Instead, I went for that buy. I got stopped out here for the first time with 9 handle loss. Then I got break even here with little profit. So overall, my loss was 164. Then I just watching this market. I was observing this sell. Everything I was just observing. I didn't do anything, as I told you yesterday that I'm not going to trade anymore. And then around 7 here, I closed my chart around this area. I was seeing this fall, this new, the 7 a.m. kill zone entry here. The 7 a.m. kill zone entry here didn't provided me the entry from this parallel gap. Either way, I wouldn't go for that trade. For example, even if it tap to this gap, I wouldn't go for that trade as well. So I let everything go, and I was so confident here. I was extremely bullish here until the buy side liquidity around this area. I was bullish, so I was seeing this first presented gap from today. This is the first presented gap after 9:30. Market tap to this first presented gap. I was watching this one. I was not feeling good to take the entry because, as I told, I don't want to take the entry. Would love to cover the 50% of that gap with the 20 handle stop loss. Profit target is 25 handle, wherever the 25 handle is, whatever it is. It has perfectly provided me this 25 handle. And remember, for the first presented gap, there is no validity for fair value gap, new week opening gap, new day opening gap. Even if I was thinking, like, even if I took that entry, if I get stopped out, I know that my bias is bullish, so I will take the buy instead of the sell. I will take the buy from that first presented fair value gap. I didn't do. I closed my chart after that fall. When this candle appeared here, started to go higher, I closed my chart, tried to sleep. When I was sleeping, I was just bring out my phone and I was watching the chart. I put my phone again. I started to watch my chart again. So I was feeling like, okay, let's take a trade. Let's take it. I was like feeling so inconvenient today. Okay, so I was just opening my chart through my phone. I closed my laptop, but I was watching my chart and I wasn't feeling good. So what I did, I took a buy here. When this candle appeared, just go one tick below that low. Just one tick below that low, I took the buy here. Stop loss was just below this low, just below that low. I got a stopped out here. It has provided me 24 handle. I didn't close it. I got a stopped out. When I got a stopped out, I took rebuy here. Then my stop loss was like here. I saw, just let me show you. there was a fair value cap. Now I am not able to mark it, but there was a fair value cap. I put my fair stop loss below that fair value cap. The stop loss was near about 32 handle, something like that. 32 handle stop loss. Then I got stopped out with that 32 handle stop loss. Here I got a very small stop loss, like 9 handle, 8 to 9 handle stop loss. I got stopped out here. Then I got 32 handle stop loss, and overall I blew my account. Now I'm not able to show you the execution. As you can see, I can't just log into the trade of it here. I can't log it as the account is blown. You see the error here. I didn't do anything, so I just can't show you the execution. If I was able to show you, you would see that I took the buy here, I took the buy there, and covered the stop loss for 32 handle. And then I got stopped out, I blow my account. Now you can say, brother, you just blew your account. Now you are giving the excuse. I would love to ask you, can anyone think, is there any buying opportunity? I am sorry about this London session, because that London session I was feeling confident about that buy. Okay, so it didn't work. It's okay. That London session, it didn't work. It's okay. But here, who can tell me that that is a good area to take the buy? I mean, I don't think so. It's a good area to take the buy. Even if I got a stopped out here, I took rebuy to that specific candle and took that 32 handle stop loss. Perfectly, I got stopped out here, blew my account. Then I slept with a very nice sound sleep. I slept a very nice sound sleep. Okay, I get up around this area, like here, I guess. Proterapat just gave me a message to my WhatsApp, and my mother called me. So I get up, and when I get up, I opened my chart, and this time I was feeling cool. Okay, I don't need to rush. I'm not feeling urgent. I'm not doing anything. So when I was watching Proterapat, in the meantime, I was just seeing my trade. I mean, sorry, the this thing, the what does it? Discord. So I started to outline the trade. Okay, so here, this is the, sorry, a lot of masses over here, lot of masses. Okay, so this is the first screenshot I showed. Observe it. That was the first thing I told, that observe it. What was this order block? So I was bearish. Now let me explain the price action, and let me show you the everything, because I did it all to my paper account, and in this time I wasn't in rush. What I did over there, around there, and what I did here, you will just and try to understand that. You'll feel good. Okay, and you will think that no, we are not in a bad hand, we are actually in a safe hand. That was the unfinished business, which was my target. Actually, it hit over there, but I will talk about this everything. I'm going to continue this thing. If anyone just would love to join me later, they can join me later. Okay, there is nothing wrong. That was the first time when market came here. Okay, this area, this candle, a specific candle. Let me go to the 15-minute chart. This is my 15-minute chart. My bias was bullish. This relatively equal highs was my bias. Market closed below this new week opening gap. Later I opened my chart and I saw it was a bad price action. Until this area, it was a bad price action. Now at the beginning of this stream, I told you that get ready with the pen and paper, because you are going to miss this information. As I told that before one time, I'm going to repeat it one more time. So please make sure that you took the notes, you write it down. If you have the holiday in front of you, that means today is Monday, Tuesday is holiday, or today is Tuesday, Wednesday is holiday. If it is Thursday and Friday is holiday, then lunch hour is the best area to trade. I'm repeating it one more time. If you have a holiday in front of you, just tomorrow is the holiday, not like today's Friday and you have Monday holiday. No, not like that. Like today's Monday, tomorrow is holiday, or maybe today's Thursday, tomorrow is that means Friday is holiday. Then lunch hour is the best area to trade. I repeated it 3 times. If you don't write it down, you will forget it, because before the last holiday, I told it to you. Okay, just make sure that you write it down, otherwise you'll forget it. I promise you, brother, you will forget it. If you have holiday tomorrow, lunch hour, today's lunch hour is the best area to trade. For me, lunch hour is from 11:30 to 1 p.m. or 12:50 p.m. That is my lunch hour, and I believe that in that area price action will be so precise if I have the holiday tomorrow. Why is that? Because tomorrow is holiday. Most of the people are not going to take break in this lunch hour is not going to be useless or priceless or precisionless, because tomorrow is holiday. I'm in rush. Okay, I have no way to trade tomorrow, so today every second is important for me. And the after holiday, the morning session is always gonna be the worst price action. The price will start to be good around the lunch hour after the holiday. But after holiday, lunch hour trading is not valid. But you will start to observe the price, feel the price, to feel confident to trade around the PM session. After holiday, morning session, most of the time it's the manipulated session. It doesn't mean always, but most of the time. Okay, not always, most of the time. Before holiday, lunch hour is the best area. After holiday, lunch hour is the area where market will start to get ready for the precise price action. Morning session is gonna be highly manipulative. So make sure that you took all these notes and you are going to keep that in remember. Okay, what holiday? What do you mean by what holiday, brother? What time in New York time zone? I didn't understand, brother. Both of your question I didn't get. It is very precise. I clearly told that. Okay, lunch hour for me is 11:30 to 12:50 or 1 p.m. New York local time. That is my lunch hour. Holiday means off day. USD holiday. It can be any type of holiday. If you come here to this calendar, I love to use this forex calendar, but you can use any other calendar if you want. See here, Thursday is bank holiday for USD. Okay, so look here, USD bank holiday. Market will be open, but as USD is bank holiday, I will consider it as a holiday, no trading day. There should not be any trade placement over here. For me, the lunch hour start from 11:30, exact 11:30 to 1 p.m. for me. If you want to go for the ICT zone, then according to ICT, it's 12 to 1:30, and 2024 mentorship ICT told the lunch hour is 11:30 to 1:30. Now it's up to you which one you would love to use. But for me, the lunch hour start exactly 11:30, and it complete exactly 12:50. But if you don't understand that macro, then you can stay until 1 p.m. So 11:30 New York local time to 1 p.m. New York local time. Very specific, very clearly. I guess there is no more confusion, right? Okay, I guess it is complete. So here, this is the 15-minute chart, I was extremely bullish. When market closed this candle, a specific, now I have some question because I have already done all of these things long time. I've already done this long time ago in my YouTube channel. When this candle from 15-minute chart closed below this new week opening gap, should I look for buy? This is my question to all of you. Please try to give me the reply, because I'm going to just give you some specific thing. Okay, just little learning session, not the trading session. As if you any of you would love to trade right now, you can just close the session and you can rewatch this later. If the 15-minute candle close below this new week opening gap, now maybe my bias is bullish, maybe I'm expecting market will go higher. Am I allowed to take the buy? Any buy, is it, when I will be able to take the buy? If there is any 15-minute candle close above this new week opening gap, then I will start to look for a buy, right? So okay, so I guess thank you Mahdi for replying, man. Thank you so much, because if you don't give me the reply, I don't know you are getting my point or not. So when this candle has closed below this new week opening gap, I also know that today is the expansion day. I don't need this 15-minute chart. I need this 15-minute chart if and only if I'm thinking that market will go higher. In that type of situation, I need the 15-minute chart to see if it can close above this new week opening gap high. Otherwise, I should keep looking for sell until it is falling. At the same time, after a big fall, no buy is valid until there is a 15-minute bullish parallel gap. Very specific rule. After a big fall, anytime, any day, anywhere, after a big fall or after a big run, No buy or sell is valid until there is a 15-minute bullish fair value gap. Not only that, even if there is a bullish fair value gap, you have to observe the next candle, how the next candle is going to close. Is it going to close below that bullish fair value gap 50%? I mean 50%. Let me actually show that to you, then you'll get actually what I'm meaning, what I'm trying to say you. For example, this is your 15-minute bullish fair value gap. So I will observe the next candle or next couple of candle, how they're going to work with this 15-minute bullish fair value gap. If it close one tick below that constant encroachment, it is also valid if it is the fake breakout. But I prefer nobody close below the constant encroachment. If it doesn't trade this fair value gap, that is the best case of scenario. Even if it trade this fair value gap, nobody should close below the constant encroachment of that bullish fair value gap. Wick can go lower. Wick doesn't matter, but body should close at the level of the constant encroachment or above the constant encroachment. Then and only then I will start to think about the buy. Otherwise, no buy is valid for me. I will go step by step. Okay. So I think it's clear to all of you. If you ever see this type of big fall, no buy is valid if there is no bullish fair value gap. Clearly, if there is no bullish fair value gap, then no buy is valid. If you ask me, where did you get this information? ICT ever talked about this? No, sir, ICT didn't talk about this. This is my observation. I love to explain my observation. If you'd love to take it, it's okay. If you don't want to take it, just observe it. And if it doesn't work for you, just throw it to the dustbin. Okay. So here, let's talk about this price action a little bit. Market is falling, falling, falling. First, I wasn't here. Okay. Here, I have a last fair value gap from 15-minute chart. So market can reverse from this last fair value gap. I'm not going to mark it, but if you see here, there is a last fair value gap from 15-minute chart. That means market can reverse from that 15-minute last fair value gap. That means I'm looking for buy as my bias was bullish. If I would love to able to if I able to take a buy from there until the new week opening gap low, I can take a buy because it's a huge range. I'm not interested to hold my trade for 200 handle. I'll close my trade for 330 handle or something. So this is the area where I will start to think that maybe market can reverse now. At the same time, no buy is valid until there is a bullish fair value gap. Remember that, don't forget that. But that 15-minute bullish fair value gap should be created from either the last fair value gap from the 15-minute chart or the entry fair value gap from the 15-minute chart. When this last fair value gap has been broken, where is your next last fair value gap from the 15-minute chart which is valid? 100% this gap. Can you see this gap? Market traded this new week opening gap from older new week opening gap, traded that. This is the last fair value gap never been traded, which I have marked as a breakaway gap. See this gap from 15-minute chart? There is no traded. This is the first time market came here. Look at the reaction now. Until now, did you see any bullish candle? Yeah, you saw this bullish candle, but did you see something like this type of reaction? I got this reaction exactly from this breakaway gap or the 15-minute last fair value gap. So that's how you will observe the fair value gap. The fair value gap is very much important. You have to observe them with the precise way. So I don't know how you are going to use them, but try to use them in a precise way. I believe that last fair value gap and the entry fair value gap will give you the precision. So until this breakaway gap, I should keep looking for sell. Just remember all of this thing. And now I'm going to 1-minute chart, and you are not going to see where the breakaway gap started. So just take a look. It started from there, the last fair value gap from 15-minute chart. Below this last fair value gap, I have the new week opening gap and lot of these things. So I don't care about them. Until this, I should look for sell because market is falling. I should look for sell. Now let's go to 1-minute chart. Here is the 1-minute chart. Today trend is my friend. After 9:30, the trend is going to be confirmed. I told that this is the day where you don't need this 15-minute chart. You don't need this 15-minute chart for your entry. All you need this 1-minute chart. How you are going to take the entry? If the trend is confirmed after 9:30, it is bearish, right? From 9:30, you saw that big fall, right? A big fall. The next candle fall closed below this new week opening gap. What does it mean? Trend is confirmed. It is bearish. Remember, it is only valid in Wednesday and Thursday. No other day, just Wednesday and Thursday. Until a certain level. Until a certain level. The trend is going to be your friend until a certain level. Relatively equal lows, this low and that low. Relatively equal lows, very clean lows, exactly perfectly clean lows. Has taken that clean loss, traded that last fair value gap until a certain level. Trend is my friend. After that, I am just going to think about either the consolidation or the retracement or the reversal. But until a certain level, trend is my friend. Now, come to 1 minute chart. What do you need to trade in Wednesday and Thursday? Most of the Wednesday and Thursday. Trend is confirmed, right? It's bearish. You should look for this. Market will take some kind of buy side liquidity, lower market structure shift, fair value gap, boom. Again, it will take some kind of buy side liquidity, market structure shift, fair value, very specific thing, boom. Again, market will take some buy side liquidity, market structure shift, fair value gap, boom. It will keep doing this until a certain level. What is my certain level? Below this relatively equal loss, this last fair value gap. Until this area, market will keep doing this. Now let's look at this price action. What happened here? Trend is confirmed, market went higher, take that buy side liquidity. See, this high has been taken by that high. For the first time, manipulation has done. Market fall, gave me the market structure shift here. If you don't feel good to think this is the market structure shift, it's okay. That is the market structure shift here. This low has been shifted over there with a very nice run. That is the fair value gap here. This candle low, that candle high. That is the fair value gap. My entry opportunity is over there. Market didn't provide me the entry. No worries. Market make another high, went little lower, another market structure shift. Here is a fair value gap. Am I going to take the sell from there? 100% no. Why? Market didn't did the manipulation. It did the manipulation here, didn't provide me the entry here. Didn't do the manipulation here, gave me the market structure shift. Entry is not valid. Another market structure shift, no manipulation happened here. Another market structure shift, no manipulation happened. Fair value gap kept open here. The fair value gap kept open, no entry opportunity, market fall. Market went higher, take that high. See, this high has been taken here. This high has been taken. Market structure shift, fair value gap, very little fair value gap. Market didn't provide you the entry. Market fall. Another market structure shift, fair value gap. The no fair value gap, actually there is no fair value gap. Little volume balance, but market trade that volume balance. Market didn't take any manipulation. No entry opportunity. No entry opportunity. Where did it came? Here. Is that a, do you understand, is that a random level? Because you remember the last fair value gap was around this area, not here, not there. The last fair value gap I just marked from 15-minute chart here. That last fair value gap, it was here around this area. So around that area was that last fair value gap. When it is broken, what is the next logical level? This breakaway gap. There is no other fair value gap. Market can't reverse from a random level. It's nearly impossible to reverse from a random level. So always think like that way. It has to reach until a certain level. Where is my certain level? This last fair value gap is my certain level. Market reach until this area. Did it do any kind of manipulation? Not, I mean, even a single swing high has been taken here by that run. No single high has been taken around that area. Nothing. Maybe has provided you a market structure sheet. Not maybe, actually has provided you a perfect market structure sheet here. This low has been shifted over there. Very nice market structure sheet. Fair value gap. Tap to this fair value gap. Boom. Are you going to take this sell? No, sir. Why? Because market didn't do any kind of manipulation here. No swing high or relatively equal highs has been taken over there. So this market structure shift, this entry is not valid. But brother, it worked. It perfectly worked. Don't go for this. It worked here, but it is not going to work tomorrow. I promise you, brother, it's not going to work tomorrow. Always wait for the manipulation. Market was falling, 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 and came here around this area. Where is this? Did it reach in a certain level? That means this last fair value gap, or is this a random level? What do you think? What is manipulation? Liquidity taken? Absolutely, sir. Manipulation is liquidity taken. That means market has to take at least one swing high or something like that to take the liquidity. Just something, okay? So when market reach here, did it reach in a certain level? Can I think that market is now reversing? No, sir, I can't think that. Market went little higher, fall again. Am I going to take sell? No, sir, I have no opportunity to trade here. In this whole fall, if any of you think about any sell or buy around here, they are gambling. I'm sorry to say like that way. In my opinion, they are gambling here. Absolutely, they are gambling here. Then finally, market fall here, take that liquidity, give me a higher market structure shift. Okay, something like higher market structure shift. Maybe you are thinking that now it's time to reverse. Why you are thinking like that way? Should you go for the buy? 100% no. Still, this is random. Maybe market will reverse. Maybe market will go and take that new week opening gap high, low, or anything. Maybe I don't know. Maybe it will take. But you should not go for that buy. Why? Because market is still random things can't happen. It's nearly impossible. Random things happen one after of out of like 10 billion times, one time out of 10 billion times random things can happen. You should not think about buy, you are still looking for sell. Market went higher, went little lower, went higher again. When it came here, where did it came? In this area I was actually, see in my Discord, this is my first tweet here. Okay, I told that observe this order block. That was my order block here. I told observe that order block. No, not entry. I'm not taking entry. I'm just observing it. Why is that? Market went higher a little bit. Take that high. See this high? It has been taken. Now, this is not a clean market. I mean, very clean market structure shift. Not maybe it's a very clean market structure shift, but there is no fair value gap. See? So normally the entry is not valid because there is no fair value gap. Market went higher again. I was observing this gap, that gap. Is it going to work as an inverse gap? Now, my inversion fair value gap is very specific. I am not interested to take the entry from this inversion gap. I don't want to take. I will show you where I took the entry from my inversion fair value gap. I follow some specific rule. If that rule met, I will go for that trade. If it doesn't met, I'm not interested to take that entry. This is not a perfect inversion gap, so I didn't take my sell from that inversion gap. It has taken some liquidity, made that relatively equal highs, but still it has taken some liquidity, fall little bit, gave me the market structure shift, but there is no fair value gap. I'm not interested to take sell from this inversion gap because in my opinion that is not the inversion gap. I was observing this gap. No, I'm not taking the entry here. I'm just feeling the market. Can it hold the market and send it lower? Because if it can send it lower, then I will start to think about the sell. In the meantime, if it reach to this gap, I will miss every opportunity to take the sell. If it come here very near to this gap, didn't tap to this gap, instead leave any fair value gap over here, I'll take myself from that gap after observing this order block. So I'm observing it. So that is my observation here. I just clearly told observe it. Okay. And this is the next tweet. When I saw this order block didn't work, this candle appeared here, took this buy side liquidity, relatively equal highs. I put a sell stop over here. If it can come back again, closed below this gap, I will be in the market until this low. So that was my sell stop. Why is that? Because I'm now using this gap, this specific gap, as my reclaimed gap. Now you don't need to focus over there. That reclaimed gap, you don't need to understand this gap, nothing. Because I think that you guys feel like it is very confusing. You are introducing new things. No, I don't want you to focus over here, but that was my intention to take that sell. As you can see, I put the limit order limit sell stop over there. So when this candle appeared here, took that relatively equal highs, that was my sell stop. If it come here, I'll take my sell from there. That will be sell. Stop loss will be just above that reclaimed gap because I need to just cover that order block. The highest up loss, sorry, not that order block, that order block here. I just need to cover that order block low because if it go through this gap, then it can maximum go to the low of that order block, the highest up close body close candle. What happened? Market keep going higher. It never fall. It keep going higher. Then I posted. I mean, the guy told me, asked me that actually who was that? Will you still be interested to short if it get an MSST2? SK Traders actually asked me that, and I just I just write him down. Yep. Okay. So here market reach exactly to this last fair value gap. So I replied him like this way, like this way. Just read it first. Need to reject from 1 minute last fair value gap. MSS immediate reaction. Okay. Then I just make a outline here, and then I just showed him the entry how I'm going to take that entry. Remember this last fair value gap. Okay. What I'm expecting. I'm just what I told him. Very specific thing, brother. This is that same last fair value gap here. I wanted to see that it will go here. It will, give me the market structure shift. There is the fair value gap. It will tap to this fair value gap. It will fall for this low of that. This last or 15-minute breakaway gap. Okay, so I just immediately put that limit order here. As you can see, my limit order is not at the breakaway gap. Why is that? Because it is an inside setup. Why it is an inside setup? Because the real setup is here. The real setup is here. Market structure shift, fair value gap, market fall. Now you can say, brother, you told that it is not valid. It's not valid for us because it didn't do the manipulation. It's not valid for us, but it's 100% valid for market maker. Why it's not valid for us? Because market maker doesn't need to follow the rules. We need to follow the rules so that we can avoid the losing trade. Very simple logic. We can avoid the losing trade. Yeah, for that maybe we'll miss the trade. We don't care because we know the bus is coming back. We are going to catch that bus. Okay, so it's going to happen. So it doesn't need, but this is an inside setup. Market structure shift, fair value gap, market trade that fair value gap, market fall, didn't reach until the destination. This is the destination. Market go back again, trade that last fair value gap, give me another market structure shift. It is called the inside setup. Most of the time, market won't provide you any entry opportunity from the fair value gap. No, never. Okay. So my limit order was not exactly from that fair value gap, little below that fair value gap, as you can see here, just not from that fair value gap here. So I was expecting, even if it failed to trade this fair value gap, it will trade the 50% of that week. At least it will take me. Okay, at least it will take me here around this area. And as you can see, market didn't take me. It just didn't take me. Fall. When market fall here, closed below this reclaimed fair value gap. Now, this entry you don't need to know. Okay, you don't need to know. I took this entry depending on that reclaimed fair value gap. Reclaimed fair value gap, my stop loss was just above that reclaimed fair value gap. I was believing even if it go higher, it will maximum touch that order block, so my stop loss is safe over there. As you can see here, I just took that same entry here around this area. So that was my next sell limit here. My stop loss is just above that reclaimed fair value gap. It's not huge, but like 14 handle or something. So that sell limit exactly from fair value gap, not one tick below that fair value gap or something like that. No, exactly from fair value gap. Stop loss covered that reclaimed fair value gap. As I'm saying, you don't need to think about this. All you will think that market will take that liquidity, market fall. Is there any market structure shift? No, there is no market structure shift. Market went little, okay. Market fall. Did it reach to this certain level? No, it didn't reach. Started to go higher, make another swing high, little fall, went higher, take the liquidity, market structure shift. See this market structure shift here. This low has been shifted here. Fair value gap. Take the sell from there, target it until this breakaway gap. This is the first time market has provided me the perfect entry. This is the perfect entry from there. Now the problem is, if you take that sell from there, from this fair value gap, your stop loss is going to at least cover that candle which has made this fair value gap, and your partial has to be to the top of this last gap. So it's a very small range. As you can see, it's a very small range. So I don't know then how it actually fall until 25 handle. I don't know how to take that entry, but from there, because it's a very small range, you have to take a partial to the top of this breakaway gap. That is 100% sure, and your stop loss has to be there. So if you don't want to take this risk, that trade, I have no word to say. Okay, that was the reclaimed fair value gap. I just introduced it, but it doesn't mean that you have to focus over there. If you feel like it's difficult, just let it go. Let it go. Okay, I took that sell here. Look here, from this fair value gap, around this fair value gap, took it. Market fall, take a partial below that low as you can see here, take a partial just below that low and that low, relatively equal lows, took a partial there, closed my trade here. How did I trail my stop loss? Everything is I just keep taking the screenshot and I just shared it. Okay, I just keep taking the screenshot here, what I was expecting, how it is going to trade, everything. I just took the screenshot. I mean, lot of screenshot actually. I keep going. When I put my stop loss below the, sorry, the break even, everything I just shared over there. And then how did I observe that weak 50% and put my stop loss just above that weak 50%? I shared everything in my Twitter. I mean, in my Discord. Okay. So here, market fall didn't still it didn't tap to this new week opening gap, sorry, not new week opening gap, the last gap. Market went higher again. Where did it came? To that specific gap. Now, this gap is my inversion gap. This gap is my inversion gap. Why is that? Market fall here, boom, market went higher. Take that liquidity. Very specific thing, guys. I'm gonna repeat one more time. You're not going to get this from anywhere else because this is very specific and nobody use this. So if you don't want to use it, it's okay because this is my observation. I saw that this is how inversion gap worked, much more precise way. Okay, very precise way. This is how market works. Market fall, went higher. This is a bullish fair value gap. Market tap to this bullish fair value gap, went higher. Take that liquidity. What is my bias? Bearish. Why? Market didn't tap to this certain level. Still, it is random. So market can't reverse from there. Market can't reverse from there. So what happened? It tapped to this bullish fair value gap. Market went higher. Take that liquidity. That means a single swing high or relatively equal highs, whatever it is. It has taken that liquidity. Market closed below this gap. When it closed below this gap, it is my perfect selling opportunity from that inversion gap. Okay, so here, just let me show you, guys. Is it getting complicated? Because a lot of things I'm talking all together. So if it is getting complicated, just let me know. Is it getting complicated, by the way? Hey, Indian fashion, you are still here. I didn't see that you message actually. By the way, how are you? Just let me know. Is it getting complicated? Otherwise, I will continue like this way. I just need some comment. Okay, look at live market now. We tap to the 15-minute bearish parabolic if not possible 1 minute. Uh, Tansaro, brother, I told that if anyone is interested to trade, you can just do your trading. Okay, brother, and because I'm just going to explain the price action so that you can understand how to trade this market. So it doesn't matter what is happening right now. I'll see them. I have already told you if I would love to look for a buy, what I should look for, bullish fair value gap, and then how the market is going to trade that bullish fair value gap. So that is all I need. I'm not interested to sell anymore. If market only close below the constant and crossman, then and only then I'll start to look for sell. Otherwise, I'm not interested to look for sell anymore. Okay? Keep going. Wait, I understand. Hey, Outlander, you are still here? You didn't sleep, brother? Thank you, brother. Keep going, very directional. Thank you, Sujevan Sigaram. Sorry if I just mispronounced your name. 32, not complicated. Hey, cat lover. Thank you so much, brother. Bullish right now. Okay. Yeah, I'm bullish, brother. What do you think about December trading from 17th of December to 7th of February? No trade should be done from 17th, 17, okay, 1 7, 1 7, from 17th of December to 7th of February, no live money should be traded. According to me, according to my experience, according to my observation, it doesn't mean you are going to leave trading. No, just keep doing little small trade. If it doesn't work, just close your account, like just close your chart, do the paper trade or the eval, do that type of things. But live money should be traded or should be put on the risk table one time or maximum two time with a very small stop loss in this time frame, 17th of December to 7th of February, just 7th of February. That means the first week of February should not be traded. It should not be traded. So 7th of February, not exactly the first week of February. That should not be traded. It's my opinion again. So don't take it clearly. I mean, just don't take it seriously. It's your choice, brother. Very good trading is going well. Hopefully, I can take a payout coming. Oh, that's good news, boutique. Thank you so much, sister. Oh, perfect, man. I'm perfect, sister. If you target like this with 300, it's the best thing. Don't do like me, okay? You don't trade. No, brother, I don't trade gold. Not at all as clean as blue sky. Hey, Made, thank you so much. Everything clear, brother. Okay, thank you so much. Now, let's talk about this inversion fab lookup little more. What is my bias? First, think about your bias. What is your bias? My bias is bearish. Why this is my inversion fab gap? Why I'm not looking for any other bearish? Bearish sorry, inversion gap here. Until this area, until this area, no sell is valid. Until this area, no sell is valid. Why? No manipulation. That means market didn't take any buy sell liquidity when market appeared. Now, don't care about that 15-minute chart. Remember what did I say? Trend is your friend. You don't need this 15-minute chart. It's not important. Only thing is important this 1-minute chart. You don't need anything else. Just 1-minute chart. In my YouTube channel, I have already explained how to trade just by 1-minute chart. Just by 1-minute chart. And this is only valid for for Wednesday and Thursday market. What is my trend? Bearish. I'm bearish friendly. Until where? Until this last parallel gap from the 15-minute chart. Why is that? Because the last parallel gap has been broken. Remember, the last parallel gap from 15-minute chart has been broken. What is the next logical level? This last parallel gap from 15-minute chart. Until this parallel gap, I'm not bullish. Here, then I will start to think about the bullishness. No, I'm not going to take any buy. I will take buy if and only if there is a bullish parallel gap. Why is that buy? I will explain it. Okay, don't worry, I will explain it. For the first time, market went higher, take the liquidity. Here, market didn't reach until this area. Market fall, trade this area. How did it go over there and how did it trade here? Market fall here, made relatively equal lows or obvious liquidity, make a bullish fair value gap. Tap to this bullish fair value gap, boom. What should market do? Market should keep going higher because this bullish fair value gap. Why market is not going higher? Because market has to reach here. It is obvious, it is 100% sure. No randomness is valid. No random reversal is valid. Random things happens out of 100 billions time. Out of 100 billions of time one time random things can happen. Market tap to this fair value gap, bullish fair value gap, boom, market went higher. Take the liquidity. Forget about this fair value gap. You don't even need to think about this. Take that liquidity. Swing high has been taken. Market closed below this fair value gap. What is your target? This fair value gap. Market reach until this area. Look, still I have a little portion open. Still it is random. When market fall, still it is random. Market go higher. Exactly where did it go? Inversion fair value gap. If you see my execution or if you are with me in my Discord, you saw that my stop loss was just above that inversion fair value gap. I was expecting this will be unfilled fair value gap, but I covered that inversion fair value gap because my belief was it can reach maximum to the constant encroachment of that inversion fair value gap. As it's a very small range, I put my stop loss over here, just over there. Go to my Discord and see where is my stop loss. I clearly showed it over there. Okay. If you would love to take the sell from the inversion fair value gap, that is your another opportunity to take the sell from that inversion fair value gap. Okay. Your stop loss should cover at least maybe this high. Okay. Just a logical level. Just think like this order block. Just I don't know how. Maybe here 700. Okay. Target should be logical level here. The high of this breakaway gap. Again, this inversion fair value gap, this rules is according to me. Maybe you don't need to take it because I don't want any kind of controversy. That is my observation. I'm just explaining it the way I see the market. That is the inversion gap. Market fall. I took the sell here. I trailed my stop loss, took the partial here, then close my trade to the top, exactly to the top of this break. Last gap as it's showing here, but actually my limit, sorry, my target was exactly to the top of this gap. Okay, just because of the volatility, maybe it's showing little lower, but it was exactly to the top of this gap. Now, when it came here, what did I say? Let me show you. In my Now it's a buying opportunity cause 15-minute inversion fair value gap reaction for small target. Sorry. Now it's a buying opportunity cause 15-minute last fair value gap. This is the 15, not IFVZ, it's LFVZ. Last fair value gap reaction. So I am expecting 15-minute last fair value gap reaction, not the reversal. Okay. Market is going higher. I don't care. I was expecting a 15-minute last fair value gap reaction for a small target. Now, what can be my small target? Let's come here. When market here came to this last fair value gap, what was the highest up close body close candle here? This two candle is the consecutive order block. Why is that? Please go to my YouTube channel and watch the order block video. You will understand why this is the consecutive order block. Not I'm watching the last order block, last candle. Why both of these candle is valid as a order block. When market has made this order block, this candle didn't tap to this order block. It is an unfinished business. Market has to finish this business. At the same time, remember when market trade this last fair value gap, given the market structure shift, this fair value gap has not been traded. Market didn't trade this fair value gap. This is another unfinished business. This is two unfinished business. One is order block, second is this last fair value gap. Both of them are unfinished business. Market came here. Look at the reaction, the expansion after reaching here. Look at the reaction. What is the reaction from there? From the last fair value gap. No, I'm not bullish. I'm not interested to take the buy. But as I have seen, there is two unfinished business over here. I would love to catch that run or the reaction until this area, because after reaching this area, market can come back again and it can fall for this breakaway gap constant crossment, or maybe to the low, or maybe it will close below this 15-minute last fair value gap. It will close everything. Maybe, I don't know. I don't care about that. All I care, I'm just trying to catch the reaction. Until where? This unfinished business. Now here is a question. If there was no unfinished business, what did you take that buy? No, sir, I wouldn't go for that buy. Okay. What else you wouldn't go? When I saw market came here, this is the candle, that candle. Just first time traded that last fair value gap. That specific candle, not like Mickey Mouse move, Mickey Mouse move. No. One candle trade here, then market started to go higher. Look at the bull candle. 1, 2, 3, 4, 5. 5 bull candle with speed. See this speed over here. I'm just going to remove this candle. This fair value gap from my chart, because I would love to show you another inversion fair value gap rules. Okay. That candle trade that 15-minute fair value gap, and then look at the reaction. Boom. Do you see the speed? Now look at the time. It's lunch hour. Look at that selling time. This sell or that sell. Both of the sell. What is the time? After 11:30. Look at the 11 after 11:30 the price action. How beautiful and precise it is. Why is that? Because tomorrow is my holiday, man. I showed you how precise the market will be just around the lunch hour, just before the holiday. Just before the holiday. Always remember that. But it doesn't mean every time it is going to repeat. No, sir. Sometimes the lunch hour, it's bullshit. Like yesterday's AM session. Remember how bullshit price action was that? And then market went higher. I'll talk about that as well. So after 11:30, look at the price action. How beautifully it fall until this area. Okay? When I saw this thing, boom. Look at this fair value gap. That bearish fair value gap. Okay. Now I'm not talking about this bullish fair value gap. Now I'm talking about this bearish fair value gap. Why is that? Why that bullish fair value gap was important? That bullish fair value gap was important to take a inversion bearish fair value gap until the target. When the target has been done, do I need any inversed bullish fair value gap? No. Now I need a inversed bearish fair value gap, because market reached until this target. Look at this fair value gap. Market trade this fair value gap, fall. Take that liquidity. See, this liquidity has been taken. When the liquidity has been taken, what is my bias now? Am I bearish anymore? No, sir, I'm bullish. Now I'm bullish. Why? Because I'm expecting market is going to finish the unfinished business. If there is no unfinished business, I'm not interested to take that buy. If after trading by one candle, if I don't see this speed, I'm not interested to take the buy. I don't care how beautiful the setup is. If it is immediately like this type of reaction, you can simply feel it, how strong that reaction is. I immediately connect here. Look at this area. Okay, that area I told that now it's a buying opportunity cause 50 minute last five look up reaction for a small target. Very specific thing. A small target. That unfinished business should be finished. When market came here, I took the buy because of the volatility. It's showing here, but when it tapped to this inversion gap, let me remove this one. Actually, let me put it over there. Okay, and just let me keep it over here. Okay? This fair value gap market trade took the liquidity. If it doesn't take the liquidity, this is not my inversion fair value gap. Observe it. I will promise you, brother. I'm promising you, you will get much more better confidence to use that thing, man. Just use that thing. Market came back again to that inversion fair value gap. I took first buy when it tapped to the high. This is the first time market tapped to this inversion gap. First time I pushed my button because of the volatility, and you know the trading view chart is 3 seconds delayed. My entry was showing here. So when I showed that I see that my entry is over there. I put a limit order to the constant encroachment of that inversion fair value gap because how far market can reach maximum to the 50% of that inversion fair value gap, maximum to the 50%, not below this 50% of that inversion fair value gap. But brother, market went a little lower. That's why my stop loss should be below this inversion fair value gap. By the way, my stop loss wasn't there. My stop loss was much more lower. Why is that? I will talk about that. But if you'd love to take the inversion fair value gap entry, your stop loss should be just 2 or 3 tick below that inversion fair value gap because market should not close below the constant encroachment of that inversion fair value gap. One candle closed, the very next candle closed above this constant encroachment of that inversion fair value gap. Very specific thing. Remember this inversion fair value gap? Not even a single body closed above that inversion fair value gap before taking the liquidity and reaching until a certain level. So fake breakout happened here. Even if your stop loss is below that inversion fair value gap, you are still safe. Okay. So your entry should be exactly to the top of this inversion fair value gap. Exactly to the top. Now let's look for another thing. Now is that inversion fair value gap is clear, brother? And look over here, market never come back again to the top of this inversion fair value gap. Never come back. Okay. So if I take the buy here, next time market didn't tap to this inversion fair value gap. So I'm going to remove this inversion fair value gap if it is clear to all of you. Very specific rules. Market has to trade this gap, fall, take the liquidity. Now it is a valid inversion fair value gap. If it doesn't do that, for example, something like that. Okay, not that. Like look this one. This is not my inversion fair value gap. Let me remove this one and let me put a gap here. Let me mark it. No, this is not my inversion fair value gap. Okay, look what happened. Market went higher, tapped to this gap. If this candle could take that high or that high, any of them, okay, if it could take them, this would be my perfect inversion gap. If I was bearish, then I would start to look for sell from that inversion gap. This would be my inversion gap. As it didn't do that, I don't want to take the sell from this gap. Okay, is that clear, guys? Good night, Tito. I have to sleep. Okay, see you, Outlander. See you, brother. Hey, Tahir Mustafa, how are you, brother? I like how you qualify a valid inversion fair value gap. That is just my observation. Okay, so don't just take it. Do your own analysis. If you think it's going to, work. It's working for you. Perfect. If it doesn't work for you, just let it go. Okay, just throw it to the dustbin. Okay. So yeah, that inversion gap, is it clear? Just let me know, guys. Otherwise, how do I know that there is someone just watching it? I can see just 48 people. So yeah. Hey, Sarjas Sebastian, how are you, brother? By the way, if you don't reply me, I'm not going to continue. It's kind of a school class, okay? We are doing the school class. I know some of you actually get angry on me because I keep asking you the question. I need to make sure that you are not sleeping because when I was watching ICT's live, sometimes I just got asleep. I don't know when I got asleep. Then I wake up, I just rewind the video, then I rewatch, I get sleep again. Okay, Jack T, clear, very clear. I need two more questions. I mean, two more reply. Please, guys, don't be so lazy. I have still a lot to give you. Okay, I have a lot to give you. Price heading to current new week opening cap. I'm bullish, brother. I told you I'm bullish. I will talk about this entry. Okay, whereas the entry opportunity, everything, I'll talk about them. Just let me finish this. I clearly told that I will be bullish if and only if there is a bullish fair value cap, and if market failed to trade this bullish fair value cap, or if it trade that bullish fair value cap, did it trade the 50% of that bullish fair value cap or not? I have already told at the beginning. So if it doesn't do that, I'll be bullish until the new week opening gap, last fair value gap, entry fair value gap. So here, until this entry fair value gap, I'll be bullish. At least, okay, at least that fair value gap low. Until that low, I'll be bullish. And then if it can go through this, then this new week opening gap and the last fair value gap from 15-minute chart. Until that area, I'll be bullish. But at least below that low, I'll be bullish. I'll talk about this. Just give me a little time. I need to finish this first. Sir, this was everything's good. Thank you so much, brother. Bro, can cut the teaching parts and add to your learning. Small clips. Much I didn't get your question. I mean, what did you say? I'm a noob about all of this. Okay, so you guys have to give me the solution with your question about these technical issues, because I'm a noob about all of these things. Okay, you can cut the teaching parts and add to your learning small clips. If you can do it, I will be grateful to you. And yeah, just if you can send it to me, I will just make another playlist, and I will put them over there. If anyone can help me like that way, I'll be grateful to all of you. I mean, if anyone can do that, because I am not able to do that. I am a noob about all of these technical issues, so I keep asking for help from all of you. So most, if you are saying that you are going to cut the uh, the teaching part in a small clip, if you are doing it, then if you can send it to me, I'll post it to my YouTube channel. I will do that. Okay, so if you are doing it, but if you tell me to do it, I don't know. I don't know, but it's a big job. I mean, I don't what you mean actually. If you can make it little clear. Okay, add to YouTube as a small clip. How to do it, I don't know. I said it's better than melatonin. You saying Martin. Okay, guys, thank you so much that I got at least something from the inversion fair value cap. It is clear to you. Again, remember, if market doesn't trade it and take the liquidity, I'm not going to use it as an inversion fair value cap. If market do that, that is my inversion gap. Very specific thing. You are not going to get it from anywhere else. Never ever. Okay. Now let's come to the best entry opportunity. So what is the best entry opportunity? Okay, here. Market came here in a logical level, took all the sell side liquidity, give me the market structure shift. A very clean, perfect swing high has been shifted by that specific candle. Look at this specific candle. Very clean swing high has been shifted by this specific run. That specific run, market structure shift. Entry fair value gap, which is valid from the gap. So this volume gap, okay, from that gap, it is valid from there. This is the entry gap. This is the breakaway gap. I keep calling them as our well-known setup. If you watch my previous video, or if you are with me for so long now in my YouTube channel, you already know that at the beginning of my streaming, I only go for this type of well-known setup where I got near about 95% winning rate because of this in well-known setup. This is called our well-known setup. It is highly related with 15 minutes and 1 minute. It is highly related with this time frame. So this is called our well-known setup. I need the immediate reaction. That means within three candle, market has to trade this fair value gap, that entry fair value gap. One candle, two candle, third candle, trade that entry fair value gap. That will be my entry. stop loss is going to cover at least the 50% of that breakaway gap. If it is possible to cover the low of that breakaway gap, or the candle below the candle which has made this breakaway gap, or the below the low which has taken the liquidity. This is the four way to use the stop loss. I love to put my stop loss depending on that stop loss. I mean that size. See this size 1950 handle. So my maximum stop loss should be 20 handle. As it is the PM session, still inside the lunch hour, I don't want to take that much risk. I put my stop loss here, just here, below that breakaway gap, covered that 15-minute last parallel gap high. I just covered both of them. That was my entry. Stop loss was over there. First partial was above that high. You can see here that was the first partial. After taking that partial, I put my stop loss just to the break even, and then I went to pray. Okay, just because of that, you can see I got stopped out here because that was my stop loss. If you can get the entry here, and if you put your stop loss to the break even, never retest that break even. Now I didn't take this entry depending on this setup. I took that entry depending on that inversion fair value gap. So I'm just showing you the two opportunity here, the way you would love to observe the market. Maybe you are thinking that, brother, I don't know how to use that reclaimed fair value gap. What you are talking about? I don't give a shit. No worries, you don't need to learn it. Market has provided you the best opportunity. Even from this area to that area, it's near about 22 handle, more than enough for being profitable. My target was this unfinished business order block, unfinished business last 1 minute chart low. That was my target, which is near about 37 handle. So that was my target. Stop loss was 17 handle. Target was 37 handle. I just put it randomly here and I went to pray and I saw that I got stopped out. You can see here. I just got stopped out for one tick or two tick, something like that. The market actually hit my target or whatever it is. I wasn't in front of my chart to be honest. I wasn't here. Okay. So that was the buying opportunity depending on that inversion gap or from the market structure shift fair value gap. So is there any confusion? Is that beautiful? The only thing is you already know no trade is valid in the lunch hour. But there is something nobody did you told you that if you have a holiday tomorrow, lunch hour is the best area to trade. Just nobody told you that. This is the only thing that is going to help you to miss all this better opportunity. Now think carefully, think wisely. Do you want to do it or not? Last time when I showed the before holiday lunch hour, it was much more cleaner, much more precise, much more beautiful. If you remember, I was in live. Okay, Vicky, first you have to subscribe to our channel. Second, you have to watch the pin video in our channel, not my channel. Okay, in our channel, the pin video. Now maybe you won't see the pin video. I don't know because I'm in live. But when I'm done with my live, you will be able to see the pin video in our YouTube channel where I have already give you a roadmap how you should study them. Now remember, not watching the video. If you keep watching the video, it's wasting of time. You have to take the notes, you have to study them. It's a very small video with precisely to the point. It's not like rant or something, precisely to the point. All you have to do is you have to watch one video until you understand that 100%. I clearly tried to make it much more precise way so that you guys don't get confused. But if you still confused, don't forget to join our Discord. We are here to help. Everything here is for free. Don't You don't need to worry about the money. I'm not going to get any money from you. Okay, I'm not going to take any kind of money from you. So all I'm going to try to make you profitable. Now here, when I took that buy, remember the buy here, I took the buy here, I took the buy here, and when I saw this price action, sell, buy. Just think about that and you will understand what I did here, there, and what I did here. I just needed to get rid of that account. The first reason is I can't sleep even. Just because of thinking of this, I need more time to get I mean, get well. I guess I need little more time. So yeah, until then, I will see. Remember, I told that until this low, I'm bullish. Until this low, at least until that low. Then I will observe this gap. If it can break this gap, then until this line, I'll be bullish. So first, until this line, everything is random. Everything is random until this low of that gap. Keep that in your mind. I'll talk about this right now, okay? But until now, whatever I showed you, is that clear to all of you? Or is there any question, any confusion? Because I tried to make it very simple and very specific. By the way, thank you so much, guys, to all of you to subscribe to our channel. It's now 9,017 subscribers. Big family. It's a big family for me. I never thought about this 9,000 or 9K subscriber. I thought I will complete within 2 or 3K. But it's 9K. For me, it's huge. Thanks for all of your love. Okay. How can I learn ICT? Give me a roadmap. Vicky, I have already gave you the reply, I guess. Clear, bro. Hey, Sarja, thank you so much. It's clear to you. I just need 2 to 3 more comments, please. I know you are trading, but still, just write it down clear. Just 5 words. It won't take too much time. I wanna remove all of this line from my chart because I need to talk about this now because it is now important. Okay, is that come? Okay, yeah, you also got it, I guess. Clear. Thank you so much. Please. What is the importance of unfilled fair value gap? Unfilled fair value gap will help you to understand that your bias is right. If there is an unfilled fair value gap, I'll be able to trail my stop loss too fast and I will be very much confident that market will go where I'm thinking it will go. Okay, wherever I'm thinking it will go over there. That is the importance of the unfilled fair value gap. So if you are bullish, after a certain period of time, you will start to look for an unfilled fair value gap. If you get that unfilled fair value gap, you will be very much confident that market is going toward the area I'm thinking. Market will go over there. By the way, anybody took that buy? Let me know to your real money anybody took the buy or not. Just let me know that. Okay, okay, I guess everyone got this point. So I'm going to remove this. This is very specific thing, not a very random thing. I don't something I use very specific, like week 50%, a very specific week 50%. I will talk about this, but after a little. After a little, I would love to go tomorrow, yesterday's PM session. I'd love to go over there because it was a funny thing. Okay, it was the best funny thing ever. That was the buy side liquidity yesterday I was looking for. Okay, so when fall market fall here, took that liquidity here. It has taken that liquidity around this area. It has cleared that obvious liquidity. That was the last fair value gap. Very specific thing, guys. Same thing like today. Very specific thing. Not I'm changing any word. Last fair value gap from 15-minute chart. Here. At the same time, new week opening gap 50%. Now I'm going to 1 minute chart here. So if you remember yesterday, I took a buy from this fair value gap here, from that fair value gap. Market structure shift, clean market structure shift, fair value gap, breakaway gap. There was the breakaway gap. I'm not going to mark the breakaway gap like today, just like today, just like today. Breakaway gap, stop loss. I trailed in front of all of you. Talked about this 8:30 open. Told that it is supporting this price. It is cool. It is a good news. Market went higher. When it went higher, I clearly told you one thing. If you remember or not, do you remember? I am gonna remind you one more time. Here, let me actually mark that thing. Actually, not. I don't need this one. I can use from 15-minute chart here. This is the 15-minute entry fair value gap. This is the 15-minute last fair value gap. I'm just going to mark that 15-minute entry fair value gap because I clearly talked about this 15-minute last fair value gap. By the way, here, whatever I told, just go back and listen that part again. That was my unfilled fair value gap. That was my unfilled fair value gap. I want to say unfilled here. Okay? It is important, that's why I'm just going to explain it. Okay. My stop loss was first below this unfilled fair value gap. I wanted to close my stream, so I trailed my stop loss later. Just below that low, I got a stop loss. I closed my stream because I need to close my stream. Before closing that stream, I clearly told that when market will reach to this entry fair value gap, the reaction will send the price again to the up to the top of this new week opening gap high. Here, it will send the price. It can send the price to the top of this new week opening gap high from 15-minute chart tap to this area. My target was first this buy side liquidity here, sorry, that high and that high. They are the buy side liquidity, and lastly this buy side liquidity. These two buy side liquidity was my target. Here, that buy side liquidity relatively equal highs, and that buy side liquidity from 1-minute chart also. Here, this obvious liquidity. Okay, this high has been taken over here by a shallow run, which is called the obvious liquidity. So these two buy side liquidity was my target for yesterday. I clearly told that when market will reach to this gap, entry fair value from 15-minute chart, it can retest this new week opening gap. Here is your unfilled fair value gap. Go and rewatch. Okay, if you have any confusion, stop loss should be below this unfilled fair value gap, and then hold your trade until this buy side liquidity. How did it work yesterday? Wasn't it so precise and so clear? Look at this run. Yeah, if you took that sell, congratulations, brother. I wasn't looking for sell yesterday. I was bullish. So I will only interested to take the buy. For example, today my bias was bullish. But as today is my trend is my friend, so I should keep looking for trend first until certain area, then I will start to think about the buy move. Why? Because my bias was bullish. I'm expecting that market will take that buy side liquidity here. That is my buy side liquidity, which is my target. It doesn't need to reach until this area, but in the meantime, I'll be profitable. A lot of time I'll get profit because if my bias is over here, if I don't even take that sell, I will go for that buy because my bias was bullish. I'll let all the sell go and then I'll take that buy. It is very specific. Okay. So did you find it helpful? Very specific thing. At the end of the stream, I talked about this. That was yesterday's PM session, by the way. Wow, market didn't tap to this low. Still it is random. See, still this is random. I don't like this randomness. If and only if there is a volume balance, then it is valid. And as I can see, there is no volume imbalance. Okay, there is a volume balance actually. Yep, there is a small volume balance here. This candle close, then this candle open. See the volume balance here. This is the volume balance. So in that type of situation, actually your entry level cap is until that area. But I would love to use it until here, and I would love to see market will exactly tap to the low. That is my expectation, and this is how I would love to see. Even if I was in this trade, I would love to see market will tap to this low of that entry level gap at least. Then if it would love to reverse, we'll see about that. Okay? We'll see that. But right now, I'm expecting market will at least tap to this low. Now, I'm not interested to look for any sell. Now let's come to this area, which again, this is not hindsight. Okay, at the beginning of this stream, I showed it to you. Here is the 15-minute bullish fair value gap. I only care about that bullish fair value gap, just this bullish fair value gap. How market is going to work with this bullish fair value gap? By which candle? By that specific candle. If this, just remember, by this specific candle, if this candle closed below this bullish fair value gap constant encroachment, I'm not bullish anymore, I'm not bearish anymore. I'm out of trade. No trading opportunity for me. I'm done. I'm not interested to trade anymore. Okay, I'm done. If this candle failed to close below this constant encroachment of this fair value gap, or if it doesn't even trade this gap, I'm extremely bullish now. This is the next fair value gap. If it tap to this fair value gap, that is the best case of scenario to go for the buy. If this candle tap to this gap, that is the best case of scenario to look for the buy. If it doesn't tap to this fair value gap, you should not look for the buy in other days. Not today. Today what? Trend is your friend. All you care about the 1 minute chart, not 15-minute chart. 15-minute chart is important until there is a bullish fair value gap from 15-minute chart, when you are actually changing your direction. You are bearish. Now you are changing your direction. So you need 15-minute chart just for this fair value gap, and until this candle close. When this candle has been closed, you are done. You don't need to think about this 15-minute chart anymore. All you need 1 minute chart. Let's go to 1 minute chart. So here is my 1 minute chart, and all I can see is, look here, I have nothing to do, nothing at all to do here. Market keep going higher, make this bullish fair value gap 33, 34, 37, 38, 34. Here, this candle. When this candle close, this fair value gap has confirmed, I guess. Or is it? Oh no, 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 no. Sorry. Not this candle. This candle is 115. 115 means 129. So 129, 129. Here. When this candle closed, that specific candle from 1 minute chart, when this candle closed, this fair value gap confirmed. Okay, when this candle closed from 1 minute chart, this fair value gap has been confirmed. What is now my thinking first? My first thinking is market is coming back to this fair value gap. If it come here, perfect. If it doesn't come here, I don't care. Why is that? All I need 1 minute chart now. No 15-minute chart, 1 minute chart. In 1 minute chart, I will see, did there any manipulation? What is my bias now? Bullish. Until where? Until this certain level, that low. Until that low, I'm looking for bullish. Nothing is going to change my bias. I'm not thinking about the sell. No sell is valid for me. Look at this low and that low. Is there any manipulation? Anybody can tell me? Is there any? Do you see any manipulation? I'm the long position. Oh, Mahdi, that's cool, man. Is there any confusion? Anybody has any confusion about that manipulation? What is my bias now? Bullish. Is there any manipulation happened? Hello, sir. I need the reply. I need the reply. Are you in position? I have already outlined that position. Okay. Gupta is here. Oh, that's cool, Gupta. I was asking about you. That's okay. Okay. Let's see if 15-minute bullish fabric up will be a inverse. Okay, let's see, brother. Wow, so many ICT traders over here. How is everyone doing? Hey, live prop from. How are you, brother? How is the market treating everyone? I think it was good. It is good actually. Are you in position? I have outlined a position, but I didn't take the position. So when market has taken that liquidity, do I need the 15-minute chart? 100% no. I don't need anything. Market has taken that liquidity. Do I have the market structure shift? Yes, sir. Sorry. I have the market structure shift here. Okay. Now, do you have a fair value gap? 100% I have a fair value gap. Do you have a breakaway gap? 100% I have a breakaway gap. Here. Now, where should be your entry? Immediate reaction. Where should be your stop loss? At least cover that breakaway gap. If it is possible to cover the candle which has made that breakaway gap. If it is possible, that is the best case of scenario. What should be your target? A very specific level, a very specific level. Now, did market provide you the entry? No, sir. It was just unlucky. Just unlucky. Market didn't provide you the entry. Everything was in perfect. Everything was in line. Everything was perfect. Just market didn't provide you the entry. Your first, what you have to find, your bias. Is market going higher now? Are you allowed to take the buy now? If you think you are allowed to take the buy, perfect, no worries. Now you should start to look for the opportunity for the setup. That is the first opportunity market has provided you, where you actually missed that trade. So I'm going to remove it perfectly. It went higher, market went higher, reach until this area. Look on your left, here on your left. Do you see an important level over here that is actually reversing the price for this fair value gap? Any, look until this area, okay? When market started to fall, look at this fall, this high on your left. Is there any important level? For example, the last fair value gap or the entry fair value gap from 1 minute chart. Any important level do you see that can hold the price? The reaction can send the price until this 15-minute bullish fair value gap. Now, actually, if you ask me, I don't see anything. Look over here. No last fair value gap, no entry fair value gap, nothing here. Not even any kind of fair value gap over here. I have a very small fair value gap here. Last fair value gap from 1 minute chart, but it's too far. Not here. So when this candle appeared there, started to fall, I'm not thinking that market will fall over here. Even if it fall, I'm not going to catch that sell. But I can't think about that reaction is going to send the price until this low. I mean this 15-minute bullish fair value gap, because there is nothing. Market reached until this area around here. Now, when it came here, is there any logical level that is going to send the price lower again? I don't see any logical level. I can see that market has made relatively equal highs. So it should keep going higher again. It doesn't need to keep falling. Come over here, what happened actually? Market went until this area, fall little bit, took that low, this low, very specific low. Taken that low, went higher again, gave me the market structure shift. Is there any fair value gap? I have a fair value gap. Okay. Is there any immediate reaction? Within 3 candle, market has to trade this fair value gap. 1, 2, 3. I'm already in the market. Where should be my stop loss? At least below the candle which has made this fair value gap. If it is possible to put the stop loss below the candle which has taken the liquidity, this is the best case of scenario. If it is possible, okay. Where should be your target? The low of this fair value gap. Exactly to the low of this fair value gap. If you would love to hold it until this constant crossment, make sure that you have taken the partial over here. Around this area, you have taken the partial. I took this sell. Market trade here little bit, and this candle has closed above the lowest down close body close candle. See this lowest down close body close candle? What is that? Anybody can tell me what is that? I'm not going to mark it, but anybody can tell me what is that? Very specific. Again, this candle is also very specific, not kind of random thing. It's very specific. It has to trade the fair value gap after the market structure shift fair value gap, which I'm going to take as my perfect thing. Perfect. Absolutely. That is my order block. Now, look over here. Here until here. Do you have any unfinished business? Do you have any unfinished business, sir? Something that is not finished. Okay. Okay. And just let me actually put it over here actually. You have some unfinished business. Okay. Now it tapped to this order block. Perfect. Again, trade that order block. Perfect. It'll go little higher, little higher. Is there any, you are looking for any bullish fair value gap? Okay, you are looking for a bullish fair value gap. Tap to this order block again. Perfect. Going higher again. Perfect. What you need now? A bullish fair value gap. What is that fair value gap? Very specific thing, guys. If I get a bullish fair value gap right now, what is it going to be? An unfilled fair value gap. so that I can put my stop loss to the break even. If and only if I get a bullish fair value gap. If I don't get the bullish fair value gap, I can't move my stop loss. No moving stop loss is valid because this candle can come back again until the 50% of that order block. This is the 50% of that order block. Okay, here. But brother, if it reverse and stop me out, you have to take that risk. There's no other way. Here. See this min threshold? It can come back again to this min threshold, can go little lower and stop you out. No moving stop loss is valid. Yes, what you can do, you can put your stop loss now below that low, just below that low. You can do it if you are so afraid to hold the thing. But that should be your last line. You can't move one tick above that area. You have to take that four handle loss even if it reverse, where I believe that it should not reverse, but even if it reverse, you have to take that small loss because market can simply come back again to trade this mean threshold and the wick can stop you out if you put the stop loss right now to the break even before getting that unfilled fair value gap. Where did it came? Look, not a hindsight. Okay, where did it came? Did it tap to this low of that entry fair value gap? No, sir, it didn't tap. So is it valid or is it random? 100% this is random. When it is random, what should be my bias? Bullish. 100% I'm still bullish. Until how long? At least to the low. So what I will do, I will take a partial here. I'm not going to close my trade, but partial should be there. If you don't take the partial here, that means you're gambling. I don't care about you. I mean, whatever, how many contracts did you take? I don't care about that. All I care, did you take the partial or not? If you take one contract, you have to close your trade over there because that is the logical level. Look, logical level. Tap to this logical level. Can you see? When it tap to this logical level, you have taken the partial. Now, where should be your stop loss? Maybe to the break even or maybe, I don't know. I mean, you can trail your stop loss right now. If I were you, I would put my stop loss just below that candle. Just below that candle. One tick below that candle. If I were you. Now, I'm not saying do that. And then I can hold my trade maybe until this constant crossment, maybe to the top, maybe until the until the sorry guys, until this new week opening up low. I would never do that. Okay, to be honest, I would never go for that. My maximum target is here. That is my maximum target. Here, that gap. What is that gap, sir? Anybody can tell me what is this gap called? Anybody? I would love to mark it after effect. Is that hindsight? Maybe. When market was falling, I clearly told that why it is falling. I showed you that, right? Market wasn't bullish. Market was bearish. This candle appeared over there. Okay, I will actually adjust it if it make the liquid, I mean fair value gap. If it doesn't make the fair value gap, no need to mark it. Okay, no need to mark it because I just need the fair value gap. Very specific thing. If you don't go for that, I mean, don't want to use that, it's okay. But if you want to use it, just observe whatever I'm saying. Very, very, very specific. Trend is your friend. But brother, you are not a retail trader. I'm a retail trader in Wednesday and Thursday. I'm a retail trader. I showed you this sell in a logical level. I showed you this buy in a logical level. I showed you this buy. I talked about this buy. Here, that is your first opportunity to take the buy. Market didn't provide you the buy. Unfortunately. Same thing. Market take that liquidity. Took that liquidity. Gave me market structure shift. Immediate reaction is something that should be there. Stop loss, as I told. This is the best case of scenario to put the stop loss because as it is 8 handle just around the PM session, 8 handle is more than enough. Until certain level, when I talked about this level, when market was there, I told that until this level I am bullish. Then market will go higher or not, I don't know, sir. Now if you ask me, I don't know. So I will take the partial over here and I will put my stop loss one tick below that candle. Just one tick below that candle. If I get a stopped out here, I'm okay. If I'm not able to take the partial, I'll close my trade over there. Exactly over there. I'll close it. It's up to you how you are going to use it. Order block, lol. The way I got stopped out. Okay, bro, how are you, brother? By the way, breaker block. Breaker block will happen if and only if there is an unfilled fair value gap, and then the unfilled fair value gap is filled, then and only then that's gonna be the breaker block. Otherwise, I'm not interested. Look for the breaker block, Mahdi. Good to see you streaming, Mama. I was just explaining a little bit the price action about here. I my intention was to talk about this and the previous day entry here. I clearly told the way market actually perfectly respect whatever I told. I told market here, then until this top of this new opening gap, unfilled fair value gap, boom. That was the buy side liquidity yesterday's target. The whole morning session, market did this. So me and Nina actually doing some kind of fun yesterday. But yeah, then that is that. This is the next opportunity for today until this area. 23 handle. Is it enough for being profitable? I think so. 23 handle is more than enough for being profitable. We know how to trade this market, by the way. Hi, brother. Hi, all. Hey, Rabi. How are you? Thanks for the penguin. Breakaway gap. What is breakaway gap? Wanna say unfilled after order block? Absolutely, sir. Wanna say unfilled fair value gap after the order block? If I don't get that order unfilled fair value gap, that means maybe market can fall little bit for some kind of liquidity or something. So if I were in this trade after taking the partial, I would get stopped out here because I don't feel any logic here to hold the price without the unfilled fair value gap. If I don't have the unfilled fair value gap, I don't feel any logic to put the stop loss to the break even because it can reverse now. The same way it has provided me the reaction. Remember the reaction from there, from the last fair value gap? It can provide me the reaction from there as well. Until where? Until this fair value gap from 15 minutes at very logical level. This fair value gap is a very logical fair value gap. So, brother, can I take a sell now? Sir, what did I say? After a big run, if you would love to look for a sell, you need a 15-minute bearish fair value gap now. See this run? Market reach from there to there. You need a bearish fair value gap if you'd love to take a sell. Why is that? Because market move like 129 handle, brother. Just think about that. 129 handle market moved. And after that move, just one candle is you are thinking that market is going to reverse now? You can. I'm not. Okay guys, that was all for today. I wanted to close it earlier, but as you can see, I already took too long. It's already 2:20. I hope that it's good. If you ask me, my bias is still bullish. I will keep looking for buy only. So whenever market will take some liquidity, I'll start to look for buying opportunity. If market can go through this, my next opinion until the low of that new opening gap, then the last parabolic gap from 15-minute chart. Until that area, I'll keep looking for buy. But here I will just look if it can take some liquidity, that is another opportunity to look for the buy for me. Okay, it doesn't mean that I'm saying you to take the buy or something. If any of you are thinking that market is going to fall, you can take that sell because here my trade should be done from there. That entry should be my trade should be done. Now if I miss this trade, I'll look for another opportunity, and though it's actually risky now because market has been traded that entry fair value gap from 15-minute chart already. A very specific fair value gap. Last fair value gap, entry fair value gap. In the meantime, there is no other fair value gap. No other fair value gap. Entry fair value gap reaction, send the price little lower, perfect. Can it go through that? Even if it go through that, I won't be able to catch the buy because market didn't take the liquidity. So when it didn't take the liquidity, I'm not able to look for another buy. And in this area, looking for buy is really difficult. In the meantime, I really would love to look for a buy from here until this new opening gap low, if it provide me that. Okay, otherwise it's okay. Anybody has any question? If you don't have any question, I'm gonna close the session. At the meantime, don't forget to push the like button, 60 people are watching, but no likes. So please make sure that you have pushed the like button. Otherwise, I'm gonna start the mentorship. Okay, so $1,000 you have to pay for the mentorship, and that's gonna be very difficult. Guys, whatever I told about the week 50%, that week should be very specific. Again, that is all my observation. So you don't need to take that. This anti-favorable gap, last favorable gap, very specific thing. Very, very, very specific thing. You don't need to use them because nobody, if you ask me where ICT talked about this or from where did you learn it? No, sir, that is just my experience. That is just my observation. Okay, so that last favorable gap, anti-favorable gap, weak 50%, inversion favorable gap logic, breaker block logic, order block logic, everything is just my observation, just my experience. I saw that this is how this market worked perfect. See this order block, how did it work perfectly? Just look at this reaction from that order block. Market when coming back, you can feel like, oh, okay, maybe now it is reversing. No, it is not reversing. This random word, very specific thing. I believe that market should not reverse from that random area. It can reverse from here, yes sir, 100% it can reverse from here, but from there, no. It happens one time out of billion times. One time, just one time, out of billion of times. So I don't believe it. I still believe that market will go here. Why market fall? Because there is an unfinished business. This thing, I keep talking about this, nobody will talk about this unfinished business. This is called unfinished business. This order block is unfinished business. Oh brother, what did you learn? ICT, what did he talk about this? No sir, ICT never talked about this. So if you ask me for the reference, I am not able to give you that reference. I'm sorry for that. But as I told, this is just my observation. This trend is friend. How to use that 1 minute chart? Nobody is going to give you that shit. What I told here, keep watching, keep observing this price. You will get the precision from here. You don't even need this 15-minute chart, except the area I talked about. Except that area. Reversal. After a big fall, how can I know that market is now going to reverse? Wait for the 15-minute fair value gap and how to use this fair value gap. Never ever, nowhere you will get this information. Very specific, very things. Again, if you ask me for the reference, I'm sorry, sir. I don't have the reference. That's all my experience, and I'm just sharing my experience with all of you. So it provide me the reversal to wait for a 15-minute bullish fair value gap, and the way I explained, right? How to work with that constant enforcement. That provide me the confidence that now market can reverse. Until this area, it was random. It was random. It is now perfect area to look for buy. For the reaction, if and only if you have the unfinished business there. Remember that unfinished business I explained, that order block, that fair value gap. Order block, very simple logic. That candle has to trade it fair value gap. Traded that fair value gap here, the last fair value gap from 1 minute chart, unfinished business. So until that unfinished business, I'm bullish. Their market went through this, that is different matter. I don't need to hold it until that area. Thank you so much, guys. I tried my level best. So if you think that it's worthy, don't forget to subscribe to our channel. Don't forget to give us a thumbs up and don't forget to join us to our Discord. Okay, we are doing a lot of things over here. As I told you, every single thing was in live. I was keep providing the screenshot here. I know I put a lot of screenshot, but I just keep providing them time to time, that how I'm thinking, how I'm moving my stop loss, how I'm observing this trade, and when I'm going to take that entry. So observing trade and taking trade is different. Observing means you should feel the confident, you should get the confidence, and then pushing the button is gonna come just after the confidence. Pushing button is going to come over there. Okay. So thank you guys. So tomorrow is holiday. I don't know I'll come here or not, but yeah, until the next time. Cheers, guys.